So if you're a Falcon member, of course, you get it. If you're already in Falcon, you get it at, of course, a discounted price by proxy because you're a Falcon member. But for those of you from the outside that, you're competent with your strategy, you know what you're doing, not looking to actually change how you trade per se, and you are profitable, then of course you will have opportunity to get it now at a discounted rate. Ibby and Abdu have a code as well for an extra 10% off, so I would definitely get on it as soon as possible. We're actually going to touch on some really important things of how it relates. Abdu, you was having a conversation with us earlier about how most traders don't think they need psychology until such a later stage. I think that's a good way to start. And just chuck in a chat, by the way, let us know if you're profitable or not. Just put a Y for yes and for no if you're profitable. Yeah, do you want to run with that topic, Abdu?
Yeah, I mean, just off, because I had put up a few stories just kind of asking a few things, and people had responded to it. And what was interesting that I found is most people were saying, like, I don't know, I want to phrase this in the best way, where it's like people were aware of their problems and almost saying, like, look, this is my problem, this is exactly where I am. And then they mapped out, like, what they would do for it. But there was almost, like, no congruence with the whole thing, right? It was almost like, I'm not profitable because of these things. But then it was almost like the solution was not really there. It was just like aware of like, oh, look, like I have FOMO or whatever, or I have this, or I have that, right? And I think what was interesting was a lot of those people would actually, like, upon just asking them, they would say something like they would just read kind of Trading the Zone, which, like, I've always said publicly, I think it's a great book. It's a logical book in the sense of a lot of it may make sense, but the application of it is not really there in the most direct sense, right? And just a similar analogy, for instance, a lot of people will tell you, like, after a breakup, you're going to get over it. Does not mean you're going to get over it in the same day, so to speak, right? Where something you just get up and you're like, oh yeah, like it is what it is, on to the next, right? It doesn't work like that. There's still emotions that you have to process. Same thing with, like, I don't know, death, for instance, or whatever, if you're grieving in that idea, right? And to them was like, when you look at psychology, and the way I think all three of us agree with this, it's the thing that, like, dictates all of what we're doing, right? Like, it's everything. We're not just in trading, all your actions, what you do, your motivation, your drive, all of it. Yeah, I don't know. What do you guys think about people that kind of just approach us something that's like, I'll approach it as a if and when need to be basis, so to speak?
Yeah, that's a good point. I'm curious to hear from you first, Ibby, and in the chat that resonates with what Abdu's talking about, because mine is I feel like my path is very different because it was so different. So I'm just curious, a more up to date version of that. Ibby, what do you think?
I say it this way, look, it's like delaying the inevitable. At the end of the day, it's going to catch up to you one way or another. It doesn't matter how you trade. It doesn't matter regarding your method. When you do surpass a certain level of capital, which is different for everybody, because people's money beliefs are wired a little bit differently, but when you get to that certain capital level, it's going to catch up to you one way or another, because you're living with your brain. You can't avoid it. You can't run from it. And so if you've got any sort of roadblocks mentally when approaching the market, they're going to catch up to you no matter what. So that's my simple advice. I don't need to overcomplicate it more than that. It doesn't matter how high a mountain you go to or how deep into the ocean you go, it's going to follow you everywhere. It just may come out at a later stage. So if you're aware of it beforehand, this is my point with it. If you work on your mindset beforehand, you'll be able to be better aware as to before the problems arise. So you can actually spot the problems before they occur, or as soon as they occur, as opposed to spotting them in hindsight or afterwards. And a quick example I can give everybody is this. If you take two traders and one was extremely profitable in Q1 and they scaled their account up, from 10, 40, 80 onwards, and they did very, very well. Everybody in the outside including that person, may be under the illusion that they are closer to their goal of, let's say, 7 figures, right, as an example, which all of you are. Now, including the person, if you try and tell them that they're wrong or that they did something wrong, if they're making money, they're never going to believe you, because they've got a bias system in place. And secondly, how do you know, or how will that trader even know if they're not aware, that all of their gaps and mistakes were actually covered by profiting trades? Right? So that's the problem there. Whereas if you take trader number 2, who, let's say, failed in Q1, as in made many, many mistakes, at least by the end of Q1, they're in a position where they know what the mistakes were. They fill the gap straight away. And then Q2, 3, and 4 are linearly progressive for them if they've done so the right way. But for the first person who did well, who hadn't worked on his mind and covered his mistakes or his gaps with profiting trades, is now going to find out his answer likely in Q3. Because Q2 is going to think, you know what, maybe it's just probabilities, maybe just a bit of a slower quarter. Then Q3 and Q4 is going to hit him. So who was actually closer, in fact, to their goal? Who's progressing more, the losing trader or the winning trader? And in this case, the losing trader. So my mindset, if you work on it beforehand, you'll save yourself.
Well, Ivy, just to add to that point, just because you said something, and it's almost like, I don't even say like you're wrong in the point of view, but like when you're saying like they'll find out in Q3, Q4, if you actually just look at like traditional therapy, so to speak, and not to branch it off, but what are people doing in therapy a lot of times? They're actually talking about childhood issues, meaning things that they've actually been acting upon for 15, 16, 20, 30 years sometimes and more, right? My point is in something like that is there could be a lot of subtle things that people are not realizing that they're actually hurting in their trading, so to speak, in different ways that isn't obvious on a trade to trade basis, right? Like if every trade you made the exact same mistake, it's actually really easy to improve, right? Because you would just like, you'd have 10 trades, 10 of the exact same mistake, and then boom, you'd be able to just see it right away. But the reality is what if every single trade you're making like one subtle mistake within there, so to speak, for a variety of reasons? What sample size would you actually need to get to find out that mistake eventually in time, right? Do you see what I'm trying to say there?
Yeah.
Yeah,
Yeah,
that's
exactly.
very quantify. That's very difficult to even figure out because there's so many variables to your life, and then your life changes and different people come into your circle, then that changes. So the only thing really, just to your point, which is spot on, is how do you prevent it from these mistakes happening, or the ones that are not obvious, where it's like you're making the same mistake taking that entry, for example, you get too early on the same structure every single time. It's like, just don't do that, do it like this. That's more of an obvious fix. However, how do you do that? Well, you have to work on yourself. That you can work on yourself in so many different ways. But just going back to Ibby's point, just circling back to that really quick, isn't it scary to think that you could scale up on trading, make money, but still be doing things in the wrong way? Like that's so scary in and of itself, because your profitable trades are masking a lot of problems.
Yeah.
But the thing is, Abdu, you can correct me if I'm wrong here, because obviously I don't come from the gaming side of the world, of how many times you can be right for what was the streak? I'm sure you mentioned it before, where someone was right for a very, very long period of time.
Yeah, for that particular person, he was right for almost like 9 months straight, right?
There you
On
go.
something that he was fundamentally wrong about, like mathematically. I remember like people I worked with at the time, it made me question the math that I actually approached like university professors at the time. I was like that like specialized in stats and probabilities and all that. And I was like, where's my numbers wrong in this? And they're like, no, your numbers are fine. And I was like, well, apparently they're wrong because they're not playing out, right? And that particular person just kept doing this like stupid thing over and over, and he was scaling with it until he lost it all within like, I don't know, 24-hour period when it finally all caught up to him, right? And we've seen variations of that in every single point. I think that's also what happens with a lot of like the dominant trading strategies at the moment, is they target these high risk to reward trades. And the problem is when, like, if you catch like, I don't know, like a 1 to 15 or whatever, that can cover a lot of mistakes because it buys you so much more time, you know. And I think that's kind of like maybe where we kind of got a bit lucky, like back in our time. I guess it was more of like, if you had like a 3% month at the time, that was like considered really good, right? And in a way what it did is it kind of in a way humbled you. Two, it actually didn't give you that much room to make mistakes, because if you're only up 3%, you can't take 40 trades, right? Whereas if you make 15% and you're risking 1% a trade, 15 trades is a lot of attempts at something. Chances are you're not going to lose all 15 straight, right? And that's the problem about prolonging those issues. And that's kind of my point, is it could, like, if you hit a certain sequence and not even a hard one, you can have those problems for such a very long time.
Yeah, that's absolutely spot on. And you would never think to address it as well, because listen, if someone out there is taking like an FTMO, they've had their first withdrawal and it's like, say, £7,000, you would rather be in a position for most people to be, well, I've got 7K, so like these problems that I might have, I'll fix them at a later stage. But I always go back to this in the webinar last night. There is, and anyone in the chat, let me know, right? This is not like a biased fact, but just from an overall observation of the industry, I don't know anyone that you could point out that trades like that and will go into, say, 7, 8, 9, 10% of drawdown until the win comes in at scale. And if there is one or two, whoever you think, well, then that's the problem with itself. You can only name one or two. So then you're either exactly like that, same upbringing, same personality trait. They might have a rare personality trait where generally losses do not bother them at scale, at nothing. And their empathy score is very, very low, like more towards like psychopath. And that's the truth, right? You actually study psychopaths or psychopathy. Everyone has it to a degree. Some are lower and some are higher. naturally people that are a bit more psychopath would naturally not have much emotion, sympathy, compassion, empathy. They would have hardly any. So therefore it would be a lot easier to not take emotions onto the next trade. You might be literally that type of person where 10 losses in a row, not bothered. But for most people, most of the world are not wired that way and will never be wired that way. So what's the point? Why follow exceptions when you have to look at what's repeatable, what's consistent, what's actually going to be your line of work and what you're probably going to be like? That's why I always approach it that way. So
but,
there's
but
no
also, yeah, I was just going to say with, I don't know, did I cut you off there?
no. Why do you and Ibby, why do you think that people are still searching for it? Because we know logic doesn't always apply to people. You could say, look, logically, drinking alcohol every single day, constantly, probably not a good idea. But yeah, I know, but you still go and do it. So from a trading perspective, where money's at the end of the line, why do you think people still don't listen?
I mean, you said it spot on right there with the alcohol thing. I think you don't ask anyone about alcohol and they're like, yeah, this is a really good thing for me. Like 0 people are actually going to give you that answer, right?
Exactly.
And most of them are well aware, and same thing with like smoking. They're well aware of the long-term health benefit, like not benefits, the negatives, and all those things associated, yet they'll still do it, right? And it's almost because they don't see the negative in the moment, right? Like if you took a shot of alcohol and right there, for instance, you just somehow knew you lost like, I don't know, 10 minutes of your long-term life or whatever on the spot, a lot less people would drink, right? But it's the same thing with trading. And I would say in trading, it's even worse because you can profit off a mistake, right? And that is a very different ideology to most other areas of life. Like you don't go to school, take a test, fail it, and then maybe somehow win that test. And then teacher's like, oh, you answered this incorrectly, but today that was the right day to do that. So I'm going to give you 100 instead, right? So we still hold that thought process, right? Of where you can do something wrong or rather, and then get paid out, so to speak, whether that's a percentage win, a scale up or whatever. How do you process that as like, and most people don't see it as like, oh, I gambled today and I won. If you can actually understand that, then maybe you might be able to walk away from that point, right? And be like, hey, I did something stupid today. It worked out. I should never do this again. But we don't see it that way a lot of the times. You actually be like, oh, look, this thing that like one of the worst things you can do in trading is like to kind of like YOLO in a way and then pass an assessment, you know, which is why a lot of these funding firms actually do have like certain rules to mitigate against that, because people kind of come in and say, hey, we're going to do these things. And you just want to get that account because you're saying, hey, when I get the 100K account, 200K account, then I'll trade seriously. But the problem is we don't actually even get to that point, because even if you do get to that account, the party that says, look, I just made 12% in 2 days. Let me just do that one more time so I get my 12K payout, and then I'll kind of like do the right things afterwards. And the whole problem is reliant on one more time. And all it takes is one of those one times to not work, and your whole theory is now broken, right? And then you're back in that loop.
And then I go back to the same thing. Anyone that's done that, that's promoted that to be the success story.
No.
So no one's done that one more time and said, you know what, it worked out and I became successful. And that one more time actually was a one more time. And then I went back to manageable risk. So there's no examples of anyone doing that whatsoever. So there comes the point in which that, listen, your problem is going to follow you wherever you think. The one thing of trading you have to realize is that when you're going to get into, I don't know, like becoming a doctor or an engineer, you kind of know what you're signing up for, because there is a certain barrier to entry, and that barrier to entry can be A levels into university and then university into so on. Where with trading, it's £100 a month, £200 a month, signals. Like you can get in a low barrier to entry very quickly. Most people that are getting into it are broken individuals, because you're either really sick of your job, you're miserable, thinking, I don't want to be in this. Oh, I've heard this trading thing, this could work out. So I would say the caliber of people getting involved will not appreciate the magnitude of things that you have to do. So you kind of battle that side of it as well. Then you just ask yourself, what successful trader do you know that hasn't got a ridiculously good mindset? I can't find any of them. So then, right, okay, well, do I need rewired? It's not a matter of whether you need rewired. You tell me where you're getting mindset information from versus a couple of books. Like, where are you actually actively working on your mindset? If you was to gauge it, if someone was to gauge trading and say, right, what do you do on trading every week? I work really hard. I do my ASR. I watch like 3 hours of content. I back test. I do this. I do that. I'm really in tune. I even research the market. Maybe I'm interested in fundamentals. That is an extensive amount of work. How much work do you do on mindset? And they'll scratch their heads thinking, yeah, not that much. Like, I read a couple of books here and there, and it's so little not to make why they get into these problems, and they argue with home. Their emotional response to, like, they spill a glass of water and they're just like, oh, fuck's sake. Just that response there and then is a problem. The fact that you react to like spilling a glass of water. If you react to spilling a glass of water, then I can assure you you're going to react to a loss on a trade. There's a high, and if you learn the emotional composure, how are you going to trade 100k, 200, 300, 400? It's not going to happen. You're going to make so many mistakes. And my thought of this is, how many thousands of traders do you think that were so close to keeping their funded accounts and turning things around if they just knew how to be more emotionally in control and just be aware of, right, the trade I'm looking at right now, they might have a really bad argument with their spouse. They come onto the charts. They're like, oh, I'm searching for a trade. Their identity as a trader is someone who trades every day. So therefore they force a trade even more. They're looking on the charts thinking, oh, yeah, that looks like a trade. That makes my plan. They take it. And then in hindsight, they're like, shouldn't have taken that trade. The account's gone now. What's the opportunity cost of money that you could have had by having that account? Yet someone will say, I'm not sure if I'm ready to invest into Rewired. You will lose thousands, and you will lose out money that you could possibly imagine by not mindset. So if it says, here's Rewired, here's this, I feel like I can get the same thing. I mean, show me. It's not going to be anywhere close to what you're going to become by going through the Rewired program. And we're incredibly proud of that. That's why we would push it. The thing is, in this industry, you get a lot of shysters that will always give you something off of like what would be expected to say. I mean, if I came on here and said, guys, I don't think you need Rewired, it'd be a bit strange, right? You'd of course expect me to talk positively about it. But what you'll always get from myself, Abdu, and Ibi, is that if we don't do things right for you, we will tell you. We will talk ourselves out of our own potential to do it. For example, if someone came to us and said, look, I need to book 5 coaching calls, when we had a 30-minute conversation or a 20-minute like pre-conversation, if we didn't think it was going to be a waste of time and your money, we would say, you know, you're just messing around. Go through the content. You don't need a coaching call.
Yeah.
Where someone else would go, hold on a minute. Yeah, we can book 5 calls because we can do the call. Know how to help. That's the difference between. So if we say you need Rewired and it's going to catch up on you and it's going to help, it's not because it sounds. It's because we look at individuals. And there is no level as to once you're 6 months in, then you need to work on your mindset. I genuinely would not touch any technicals until I just had a good base of like mentality. And then I would be aware of these things. So when I started taking losses, I would be less likely to carry a lot of emotion onto other trades. I would actually understand the connection of what probability thinking is versus going, oh yeah, catch my emotion onto the next trade, but I still keep doing it. For 2 years in a row, I've done it.
Yeah, I think as well, circling back to your points before, is that what a lot of people need to understand is that strategy is just interpretation of when to buy and sell. That's all it is. And there's millions of different interpretations as to how to trade the market. And the problem with traders nowadays is they're sold on the idea that an interpretation is a conclusion, right? So what I mean by that is that they think, right, of course, there's more efficient ways to trade the market, but they're just more efficient interpretations of when to buy and sell. If everybody had the same interpretation of when to buy and sell, or everybody traded the same method, the market would essentially flatline because there's no contradiction of beliefs in the market. That's why the markets move up and down. That's why the candles go up and down, is because there's an imbalance in orders coming into the exchange every single second of the day. So one thing I'm trying to clear up here for people is that there's something very objective that comes with analyzing the technical side of the market and then the psychological side of the market. The objective element is this, that the trade doesn't play out because your technical said it was going to play out. This is not the case. It doesn't matter what you think. It doesn't matter how advanced your technicals might be. The market doesn't move in your direction because your technicals said that it was going to go in that direction. You just happen to be on the right side. And this is common sense, but a lot of people don't understand that. That's number one. So the one thing that isn't interpretation are your psychological roadblocks. They're not interpretative based because you're either someone who hesitates or you're either someone who's very impulsive. There's no in between of that. Someone is either scared of taking trades or someone's either taking too many trades they shouldn't take. There's literally only that black and white element to it. All I think traders have to do to fix all of your issues, if you want to start somewhere, is start tracking the right metrics. Don't start looking too deep into your technicals because the answer will usually scream out to you very quickly if you know what you're doing. Right? And you usually know what you're doing after around 6 to 8 months of trading the same method and system. You know the fundamentals well enough to be able to spot something from a technical standpoint if it sticks out to you. Otherwise, if it's not sticking out to you, it's probably not there. You've got to look at the right things. Stop looking at things like strike rate. Stop looking at silly metrics like, oh, I had this many wins and losses. Instead, look at, out of the trades that I took in this trading week or this trading month, this many should have been taken and this many should not have been taken. And if you can't get to the stage where you can categorize your trades that way, then you either don't know your system well enough, which is an easy answer for you already, or you don't have a simple categorization system as of what trade is a low probability versus a high probability trade. And if that's subjective to you, there's either you're trading a system that's completely insufficient or you don't know it well enough and your answer's there. And it becomes so easy to fix from that standpoint. If you then look at your trades and think, you know what, I've missed out on great quality trades because I was in poor quality trades in that week. All you have to do with common sense is reverse engineer it and think, why did you then get involved in those low quality trades? And then you think, okay, what gets you involved in the market or keeps you out of the market? Decisions. So then you've got to look at where do those decisions come from? Where do they root from? And the answer is always your brain. If you didn't have a brain, how can you make decisions? The brain is your decision-making faculty. So then that begs the question of, well, why don't you study the brain? But then when you dive into psychology, as you guys know, psychology and neuroscience are different. People confuse them as the same thing. A lot of psychology, and psychologists confirm this, is not science-based. That's neuroscience. Psychologists don't even know what thought is yet. But with the topic of psychology, you can go so far into it and you can get lost, just the same way that you can with technicals. So then you have to go through the effort then, as traders, of finding out who do I take psychological advice off of. Then if you go into Douglas, everything's mathematical based. Brilliant work. I'm not saying anything for the latter, but if trading in the zone taught you to think in probabilities, I'm telling you, a lot of you will be richer. Randy Howell's work is a lot of evolutionary psychology. Brett Steenbarker is trading processes and disciplines. It's different. None of them I've seen, and I've looked into the work very thoroughly, actually stand back to image, which is very funny to me as to why. And I'm not saying this to slander them, but if you look at all their work, they always funnel you into a program of some big kind where they do one-to-one coaching, because they know that the best way to fix someone's mindset is through a practical approach where it's tailor-made for each person. Every person's psychology is different. That's the only thing that Rewired caters for, where it's probably one of the only programs that I've seen that when you go through it, there's a lot of self-application where you can pick out, or it teaches you ways to pick out certain things so that you can apply that onto yourself. So essentially you begin to coach yourself with the modules, right? We can't give too much away with like the future infrastructure, potentially bringing in psychologists and all sorts of plans that we've got, but it's the only program that I've seen that can cater for that, which is very difficult in my opinion. Yeah,
you hit on something really, really important. I'd be curious to hear your thoughts on that, which is like when you think about strategy, like imagine a football manager that wanted to, let's say it's Liverpool versus United. You would come up with a strategy as like a game plan. This is what we're going to do. Where I press, like whatever, you would come up with strategy. When you ask a trader, what's your strategy? What is the first thought that comes into your head? It's the technical strategy. Would you agree with that? You would think, but what is the word strategy? What does strategy mean? It doesn't mean we buy and sell, we demand, or we trade patterns. That's not what it is. It's like, what is strategic? What are you strategically doing? What is your strategy? And I think in trading, it just made me think, as Ibi was saying it, people have lost the meaning for the word. So your strategy is to buy, to sell, to be in the market, to call it buy, sell, and stay out the market. So then my question becomes, what is your strategy to stay out the market? What is your strategy? And you really think about that. What is your strategy to stay out the market? It's like, well, nothing.
Yeah.
So I don't, I don't know. And you realize you need a approach to do that. As a practical example, if you was aware of your emotional state, you wouldn't just take a trade for the sake of it. Right, my head's all over the place. I'm aware of that because I'm self-aware as a trader, and I shouldn't take these trades. Where someone who lacks the self-awareness would just jump into the market for the sake of it.
Well, Mark, just to add to your point right there, because my Forex funds has released this, right? They're basically the number one or number two prop firm, depending on how you want to look at it. The failure rate for phase 2, which is literally easier than phase 1, right? Like they have, like the people that pass phase 1, I think it's like 30% of them then go on to pass phase 2, which literally is half the profit target and double the time in phase 2. No one technically who passes phase 1 should really fail phase 2. Yet over 70% of the people that pass phase 1 fail it, right? And then are you going to argue in that point? And this is just not just over 1 month. This is over months and months and months and months, right? That statistic holds pretty strong. So the question becomes, is it always shitty market conditions? Because you know what, every now and then I'll agree to that answer. There might be a very tough period of time where the market's just absolutely garbage. Fair enough. But when it's year on year on year across